Good morning, everyone. So now we are back in September, back to real life. Vacation time is over. Summertime is coming to an end. Sad, but I know personally I'm kind of looking forward to getting back to work. But anyways, September is a time that people put their businesses up for sale. So I figured let's take a look at what exactly that entails. So you've come across a business that's for sale. They have a certain dollar value attached to that business, and now it's your job, and hopefully you're employing your accountant to take a look at those financial statements and weigh the pros and cons of that business and evaluate what they are selling it for and whether or not that is something for you and whether or not that price makes sense. Okay, so if you are looking at a business that is in a loss, you are going to be seeing a deficit, a net loss for that year, and likely a deficit from years past. Okay. Now, if you don't know what that means, then that means that you should be contacting your accountant so they can review those statements and give you that information in order to make a good financial decision. Okay. So if they have a loss and they're in a deficit, chances are that business is only worth what assets it has. Okay. Now, there's a whole other topic about whether to purchase assets or shares of a company, but we're not going to get into the details of that. But the short story is the buyer always wants to buy assets, or most likely wants to buy assets, and the seller wants to sell shares, and that's just a tax exemption on those usually. Okay, again, not getting into the details. So in the case that I was presented with last week, it was a business that was for sale. The business was in a deficit. It did have a loss. Assets had a value, let's call it $300,000. So now that business, if that person decides that they want to run that business, is only or should only be paying the $300,000 that those assets would cost to purchase. Okay. Now, there are other things, the name of the business, its reputation, stuff like that. But if it relies heavily on the person that owns it to get that business, then that also has to be taken into consideration of whether or not it's a good idea. So if you are buying a business that's in a deficit, that has losses, it's important to be sure that what you are going to be doing is going to be different and it's going to be better than what the last person had going on. And if you don't think it's going to be better, then buying a failing business is obviously not a good way of going about it. Okay, we're not in business to lose money. We're in business to make money. And if you're not making any money, then you might as well work at Tim Hortons. And I've said that to many clients that have come in looking at businesses. I actually once had one business that was for sale that I had 4 different people come in because it seemed like it was going to be a good business. It wasn't a good business. Somebody else bought that business and it failed very, very quickly. Thankfully, it wasn't any of my clients that did that came to get advice that had that failing business, but I sure told every single one of them not to do it. So long story short, if you are looking at purchasing a business and that business does not make money, then you need to be the person that turns that ship around. And it's probably only worth what the assets are on the books. Okay, so I hope that helps. And we'll have more and more videos coming out almost daily for the next few months till probably Christmas. And hopefully you guys keep watching. So take care of yourself, take care of your family, take care of your friends, and be well.
Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.